Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. Today, I'm bringing you a follow-up to two separate videos. The first will be my trading course video. That's where I teach anyone how to trade in the stock market, and you can learn this in a single day. And the other video is a vlog that I was making about reaching my first $1 million, which is still currently in progress. This year has been absolutely incredible when it comes to swing trading. I've averaged around $40,000 per month using a very simple strategy. And the best part is these trades only take me about 5 to 10 minutes to find, and that's it. I scan through a few charts, I spot the setup, and when the conditions line up, I'm ready to go. So today, I want to walk you through my entire swing trade strategy, the exact process that I use to find these setups, and how I determine where to enter, and how I decide to put my stop loss, and what gives me the confidence to hold these trades until I actually hit my target. So without further ado, let's get right into the video. Now, before we get into the scanner and everything, I want to break down the actual framework of my strategy, and this will include what I look for and why it works. At the center of everything, there are three indicators that I use every single time. That's going to be the RSI, also known as the Relative Strength Index, the MACD, also known as the Moving Average Convergence Divergence, and finally, the 20-day EMA, or the Exponential Moving Average for 20 days. If this sounds like Greek to you, please refer back to my trading video. I break all of this down in depth, and my goal with that video was to make trading so easy, even a kid could learn how to do it. Now, there's a reason I use these three specific indicators. Some traders like to use indicators based on the Fibonacci sequence, which, if you've never looked into it, is a series of numbers that appear everywhere in nature, architecture, and even the stock market. I use it sometimes, but not with swing trading. I personally focus more on bullish setups because that's where I'm most accurate and where I'm most profitable. I'll even take a short setup every once in a while, but most of the time, I'm trading with the buyers. Now, EMAs give me my trend structure, but they don't tell me when a stock is about to move. For that, I use the MACD, which is a trend following momentum indicator that shows the relationship between two moving averages of an asset's price. It helps me identify potential trend reversals and generate buy or sell signals. If you've never used the MACD before, here's a simple version that I put here on the screen. The MACD, or again, the Moving Average Convergence Divergence, is basically just a momentum and trend strength indicator. It shows you when momentum is in a stock and when the momentum is starting to shift, when things are cooling off, when they're heating up, or getting ready to break out. Think of it like a tug of war between buyers and sellers. Where the buyers start pulling harder, you'll see the MACD before it even shows up in the price. When the sellers start taking control, that shift shows up there too. And here's how it works. The MACD is made up of two lines, as you can see here, which is the MACD line and the signal line, and a histogram that shows the distance between them. When the MACD line, this blue line, crosses above the signal line, that's a sign that buying momentum is starting to build. That might be an opportunity for you to get into a trade. When it crosses below, selling momentum is taking over. That might be a good time for you to get out of a trade. Or if you want to short sell, you can make money when the stock goes down. Now, the histogram bars make this easier for you to visualize. When they start rising above zero, it shows that the momentum is turning bullish, or as you can see, that means that it's turning green. When they dip below zero, it's bearish or it's red. The taller the bars get, the stronger the momentum is in that direction. Now, a lot of traders mess up by looking at those crossovers in isolation. You can't just buy every time the lines cross. That's how you get trapped in a false signal. You've got to line things up with a 20-day EMA or whatever moving average that defines your trend. If the price is holding above the 20-day EMA and the MACD line crosses above the signal line, that's a solid confirmation that buyers are stepping in and the move is likely to continue. But if the price is below the EMA and you see the same crossover, it's usually just a fake bounce inside of a downtrend, and I stay far away from those. So when you combine the EMA for trend direction and the MACD for momentum confirmation, that's where the real edge starts to show up. The EMA tells you which side of the trade to be on, and the MACD gives you the timing for when that side is starting to take control. Now let's talk about the actual moment a setup forms. That's the point where you can tell something's about to happen before the move even starts. Here's what I'm looking for. When the price is trading above the 20-day EMA, like the example that we have here, the green line on screen tells me that buyers are still in control. It's a very quick way to gauge trend direction without overcomplicating things. If the price is riding above that line and holding it cleanly, I'm focused on a long setup or buying. Or if it's trading below, I stay patient or look elsewhere. Then I use the MACD and the RSI together to confirm when that buildup of energy is happening. So when the MACD line starts to flatten out and then curls back up, that's my first sign that momentum is starting to shift, and maybe I'll give myself like a little signal or something to kind of check this out later. I'll be watching for the crossover or that hook upward, especially when the histogram starts moving from negative to positive territory. That's when things start getting very interesting. At the same time, I look at the RSI to see if price is showing any signs of strength returning. If the RSI has been sitting low, say in like the 50 to 40 range, and starts curling back up while staying above 40, that is a sign that buyers are quietly stepping in. When all three line up, the price is holding above the 20-day EMA, the MACD starts to turn positive, and the RSI trends higher, that is my green light. This chart that we have on screen is a perfect example with Verizon. I was in this trade and it's a great case study for how this setup works. If you look at the daily chart, Verizon has basically been moving sideways for most of the year, not breaking down, not breaking out, just kind of sitting there, going back and forth. Most traders ignore that kind of price action. Personally, I love it because it tells me energy is building and the market is getting ready to pick a direction. Now here's what caught my attention. While Verizon was chopping around, it kept holding that 20-day EMA like a champ. Every dip into that line was getting bought up. Meanwhile, the MACD started to flatten out and curl upward, showing momentum shifting back into the favor of buyers. Then the RSI began to climb out of that mid zone, rising through 50, which told me strength was returning and that the market might be ready for a push. And I found the greatest opportunity of this around July when all of those signals lined up. I knew what was coming. All I needed was a clean daily candle that would close above recent structures to confirm that. And that's exactly what happened. That was my cue to get in when trend, momentum, and strength all start speaking the same language. Now, you might be thinking, okay, all of this makes sense, but how do I actually find these setups without spending hours chart hopping? Well, that's where this scanner comes into play. I use scanners on tradingview.com. These scanners automatically search for the exact conditions that I just explained. They run through every major stock and ETF across multiple time frames, daily, 3-day, weekly, monthly, quarterly, and they flag any ticker that fits that criteria. And in one moment, I'll demonstrate how exactly you can find this in a very easy way. But once I run my scans, I'll go through the list and check out any chart that I find interesting. If something stands out, I'll add it to what I call my priority swing list. And that's where I track my best potential setups. I wait for confirmation. And if I get it, I take the trade. If I don't, I delete it and I just move on. It's super simple and it keeps me from forcing trades that don't meet my criteria. All right, so let's go over to tradingview.com and I'll show you exactly how you can do this really quick. So currently we are on tradingview.com. Even if you don't have an account, you should still be able to do this. You want to go to the very top and then you want to look for products and then you can go to screeners and then let's go to screeners for stocks. Now we can filter through exactly what we want to look for. So you can pick the index that you want to look at. For me personally, I like to look at the NASDAQ most of the time. You could look at the price, like is the price 100 and above? Is it between 10 and 100, 10 and below, 5 and below, above the EMA 50? And you can also change this between like the EMA 20. Now this one is pretty good, crosses BB 20, or let's actually go above the 50-day EMA. And again, you can modify your EMA. Some people use 50, some people use 20, some people use 18. Whatever you want to do, it can be modified. And then you want to say a change. Is it 10% above, 5% above, 0 and above, which means it just crossed over that particular EMA. And you can also look at the market cap if that's something that matters to you. Depending on the market cap can determine how fast this stock moves up and down because of liquidity. Now, there's also PE ratios, dividend yields, sectors, performance, and then you would just go ahead and take a look at this list. And as you can see, the list is very narrow now. You have like Shopify, you have Palantir, you have Amazon, you have Tesla, Airbnb, Workday, Warner Brothers, etc., Ross. There's a bunch of other options here. So then you can take a look at this and find your setup. If you find something that looks good, you can go ahead and add it to your watch list, and that way you can prepare for a good setup. If it never comes, then don't worry about it, just move on. You don't have to force a trade. So here's the reason why this strategy works so well consistently. It's built on structure and probability. It's not built on guessing. I'm not sitting here trying to predict the next big stock. I'm waiting for very specific technical conditions that are reliably going to lead me to an expansion move. And the EMA tells me which side of the trend to be on. The MACD confirms when the shift is happening, and the RSI lets me know when the stock is overbought or it's been oversold. When all three line up, that's my green light. And because I'm working off of higher time frames, I don't have to stare at charts all day. Once I'm in, I set my stop, I set my target, and then I let the trade do its thing. This approach lets me be emotionless. I don't have to constantly watch it. You're not reacting to every candle. You're just following a simple process. It also keeps you consistent. Instead of trying to catch every single move in the market, you're only focusing on high probability setups that repeat over and over again. And at the end of the day, my entire swing trading process can be summed up in really just one sentence. Find price confirmation above the 20-day EMA, wait for that momentum shift confirmation on the MACD and RSI, and then take the trade. Whether it's a daily setup that lasts a few days or a quarterly setup that runs for a few months, the same structure applies. And the best part, you train your eyes to spot it very quickly, and you'll start seeing this setup everywhere. Stocks, ETFs, commodities, even crypto. It's the same market psychology repeating itself over and over again. This year has been proof of that for me, and that's the power of understanding how price momentum and volatility work together. And once you see it, you can never unsee it. And once you master it, trading gets a whole lot simpler. I want to thank you guys so much for watching this video. If you got any value from this, please like and subscribe. Drop a comment with stocks to let me know that you want more videos like this. I really want to talk about stocks more, and I actually have a second channel where I've been putting out content specifically for that purpose. If you want to learn more, then you can subscribe to that channel. But for a while, I'll probably be just putting out the same content on this one and the other one until the audience starts to look distinctly different. But again, if you want more information like this, please let me know and like and share the video. The more that YouTube knows that you guys like this, the more videos I can make on it. If you guys don't like it or engage with it, that tells YouTube that it's bad, and then I can't continue making these topics. So if you want more, please let YouTube know, and that lets me know so I can continue making these videos for you. Once again, thank you so much for watching this video, and you guys have a wonderful day.